Every single day, I have a lot of Toronto real estate investors who reach out to me asking me, hey Sam, what are the best investment options for condominiums within the Toronto and GTA condo market? And every single time, the first question I ask is, what is your priority? Is it cash flow or is it appreciation? And if the answer is cash flow, I have to break some unfortunate news, especially in recent years, which is that Toronto condos, simply put, for most investors, are not good options for cash flow. The numbers simply do not make sense. However, there is one exception to this, and that's exactly what we're going to talk about in today's video. The only Toronto condo type, in my professional opinion, that's actually a decent investment for cash flow. But before we get into that, hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, back with another video for you guys here today. If you're new to the channel, welcome. On this channel, we like to discuss everything having to do with the Toronto real estate market. Market stats, market facts, buyer advice, seller advice, area analysis, home prices, property tours, and real estate vlogs. So if you find any of this content enjoyable or informative, feel free to subscribe for more, or you can get in touch with me with the contact information on the screen and in the description box. So right now, most Toronto condos, in fact, I would say 80% of Toronto condos do not make sense for investment purposes, if and only if your priority is cash flow. But for investors who are more so of the cash flow, so rental yield mind, the monthly income this investment will yield them, well, for those investors, condos do not make sense, especially in today's market where we have higher interest rates, condo fees going up at higher paces because condo buildings are paying more for insurance, and the increasing cost of utilities as well due to simple inflation. More and more we see that condos do not make sense if you are an investor who is really keen on the monthly cash flow return. And might I add, before we get into what the exception to this is especially considering if you are an investor who is purchasing with only 20 to 25% down. In fact, my entire point is premised on that, right? Most condo investors who reach out to me, or most real estate investors overall who reach out to me, usually when I speak to them are only working with 20 to 25% down. If you are a cash buyer, or if you're putting out 60 to 80% down, you are in a different category. It applies mostly to people who are operating with 20 to 25, even 30% down. Condos, once again, simply don't make sense cash flow wise. But what is the exception? What is the only condo type, in my professional opinion, that makes sense if you are even working with 20 to 30% down? Obviously, the more you have down, the better results you're going to get. But what is the only condo investment, in my professional opinion, that actually makes sense if monthly rental yield and cash flow is your main priority? Well, let's cut to the chase. It is the studio unit. And now I know a lot of people are not a big fan of studios. Studio units have a lot of downsides. For instance, the appreciation is a bit capped. You will have a lot of tenant turnover. And let's be honest, a lot of studios are just simply very, very disappointing. But when you actually break down the numbers, and we're going to get to the numbers with specific buildings in a sec, studios make the most sense in terms of rental yield, monthly cash flow. What do I say that? Well, number one, let's discuss the simple fact that studios have the lowest maintenance per square foot. Simply due to the fact that studios are the smallest unit types, so their square footages are the smallest. Studios range anywhere as tiny as 290 square feet, believe it or not, and in some cases as big as 450 square feet in older buildings. Nonetheless, the 290 to 450 is a pretty small footprint in terms of size. As a result, the maintenances per square foot will be much lower. So simply put, studios have the lowest cost per square foot. However, number two, a bigger point here is that studios actually have the best per square foot rental yield. And in some cases, the gap between the per square foot rental yield of a proper studio in a good building and a 1+1 or 1 bedroom is a much larger gap than you would assume. So yes, the monthly rental yield, the monthly income you will be getting as a total figure will obviously be lower for a studio as opposed to 1 bedroom or 1+1, because market rent for 1 bedrooms and 1+1 are definitely higher than studios. When you break it down per square foot and relative to the amount of expenses you'll have on a monthly basis, studios actually net you the best results. So let's give a more figurative example, and then let's get into a more literal example. This is the way I would put it. For a studio unit in some buildings in downtown, and we'll get to in a sec with an exact example, you can actually get upwards of $2,100 a month in a down rental market, a more tenant-friendly market, a cooler time in the rental market, upwards of $2,100 at your base, or as high as in some cases when the rental market is scorching hot in the summer, $2,300, $2,400, and I have seen that. So let's get into a specific example, right? For instance, we have this sale in one of the buildings, in my opinion, that is the best in terms of investing, right? I wouldn't recommend this building in terms of living there for 3+ years. It's not the best end user building, but it's a very investor friendly building, which is 197 Yonge, the Massey Tower. Created a video on this building a while back. I created a review of it. Go check out that review if you want a more thorough, in-depth analysis of that building. But I believe 197 Yonge, the Massey Tower, has some of the best studios in terms of potential returns. When I say I've seen studios in that building went for $2,400, I am not exaggerating. That's how good the studios are in that building, and their views are absolutely stellar and out of this world. So let's take this sale in 197 Yonge. We see that it sold for $432,000. Now this is actually an abnormally small or low sale in this building. Studios usually in this building sell for $480 and above, and $480 is actually even stretching it. So whoever bought this got a killer of a deal. I mean, $430 in this building for a studio is absolutely mind-boggling. The exact square footage of this unit that sold for $432 was 378 square feet. And the maintenance was $310 a month, which comes to about 82 cents per square foot. So we have a maintenance of 82 cents per square foot. And if we assume the rental yield, and this is backed up by comparables, I looked into this building, studios as of recent months, depending on when you're watching this video, right? Recording this video March 2024. As of recent months, studios have been renting for $2,100, but dating back to summer months, you can find studios that went for $2,200, $2,300, even $2,400, as I mentioned. But assuming a $2,100 figure, that means on 378 square feet, you're getting $5.50 per square foot in terms of rental yield. So your cost is 80 cents to 85 cents, let's say. So exactly in this case, 82 cents per square foot, whereas your rental yield is $5.50 per square foot. And the numbers in of themselves so far sound good, but let's compare it to a 1+1 in that very building. If you take a look at the sale of this unit, which is a 1+1 in that building, we see that this unit, which is a 1+1 with 1 washroom, so no longer a studio, was around 610 square feet and then rented out for $2,400 a month. For 610 square feet with this unit, you have to pay the maintenance of $510 per month. So when you break it down, your cost per square foot is around 83 cents per square foot, and the rental yield is around $3.90 per square foot. So compare that to the studio we just discussed. Maintenance around 82 cents per square foot, but the rental yield of $5.50 per square foot. And when you run the numbers, once again, in total figures, of course, if you're buying with 20 to 25%, 30% down, depending on interest rate, depending on all other factors, you're still going to be operating at a deficit with the studio in this building, but you're going to definitely be operating at a much higher and larger deficit with the 1+1. And if you're buying with all cash or 80 or 70 or 60% down, you're going to be making a much larger return on the studio versus the 1+1. Any way you cut it, the studio is much better in terms of the pure dollars and cents on a monthly basis. If your priority is cash flow over appreciation, studios are the only condo investment, in my professional opinion, that makes sense in today's high interest rate, high inflation market for condos. Anyways, as always, this is Sam from SaberiSixRealEstate and Realtron Realty Inc. Let me know if you have any further questions. My contact information in the description box. Check out that 197 Yonge review. I do a lot of condo reviews on this channel. Anyways, stay tuned for more, subscribe, and stay safe. Thank you.